Hey guys, this is Rudy for Berkshire Investor. Just a very quick video here. I noticed yesterday in the news, and some of you may have seen it as well, that Occidental had made a decision. So the board of directors made a decision to pay the $200 million OXY dividend to Berkshire Hathaway in cash this quarter. You may recall, if you watched my conference call with the investor relations people on September the 8th, that at that point in time, the directors had not decided yet whether they would pay in cash or issue more common stock. And of course, issuing common stock is dilutive to the existing shareholders. That's on one hand. On the other hand, the mere fact that they are able to pay in cash provides, as this article on RigZone says, growing confidence in Oxy's ability to manage and pay its debts. All those things have been helped by the fact that not only is Oxy drilling 1.2 to 1.4 million barrels per day, but they've also managed to dispossess of some assets. They had more than $1 billion in the bank at the end of Q2. They sold off assets of about $1.3 billion or more, and they had a $5 billion undrawn facility available to them. So right now, for the foreseeable future, perhaps taking us into 2022, maybe even 2023, there's no challenge for Occidental in terms of managing its near-term debt. So here's the headline. Occidental will pay about $200 million in dividends on preferred shares to Warren Buffett's Berkshire Hathaway in cash rather than in common stock, a sign that the shale drillers' growing confidence in their ability to manage their debt load. The $2,000 per share payout on Occidental Preferred Series A cumulative perpetual preferred stock will be paid on October 15th. Occidental had been making the payments in stock since April to conserve cash, so obviously that cash crunch is now somewhat dissipated. It's not gone, and the reason for that cash crunch, of course, was the fact that they had borrowed an enormous amount of money in order to acquire Anadarko. A quote here: "This likely indicates the company is feeling better about its balance sheet and its liquidity situation and may have more confidence in its ongoing asset sales processes," says Leo Mariani, an Austin-based analyst at KeyBank Capital Markets. Currently, with long-term debt more than 3 times its market value, Occidental has been hit harder than many by the pandemic-induced drop in oil prices. Of course, you can debate this sentence here. The long-term debt more than 3 times its market value. One of the reasons for that is that the market value is not indicative of the company's actual value, because Occidental is severely undervalued. There is just no way on earth that the combined corporations of Occidental Petroleum and Anadarko together collectively are worth 10, 11, 12 billion dollars. That's just grossly undervalued, and that's one of the reasons why I'm long Occidental. So it says here, but the company has been chipping away at near-term obligations with a series of bond sales, and last month agreed to sell the land rights in the Rocky Mountains for $1.3 billion. So to me, as a long Oxy investor, this is a good news story, and I'm glad that they're going to be paying the preferred dividend in cash. I'm also happy to see the way that the management team is managing the debt. So for now, good news story for Occidental, and a great way for us to share some news about Occidental. So that's where we're at. That's where we are today. And if I have more news, I'll send you an update next.